Money with Mari. I'm your mentor, Mari, and this is Forex 101. In the last few sessions, we've reviewed a plethora of indicators, including some that can be used as a standalone strategy. But it is common for many investors to develop their own trading strategy using a combination of indicators to support their analysis. It is very important for you to play around with some different indicators to find out which ones best suit you and your trading style. In this class, I'll provide you with 7 easy steps you can take in order to help you produce a trading strategy that you're comfortable with. Let's jump right in. Step 1. Know your time frame. Consider your lifestyle and how much time you have to dedicate to watching the charts on a daily basis. Then choose a time frame that best suits you. Step 2. Choose a trend indicator. Decide on a tool to help you determine market conditions. You can use price action tools like Fibonacci and trend lines, or more technical indicators like moving averages and MACD. Step 3. Define your entry trigger. Your entry trigger will help you enter the market without hesitation. Candlesticks and patterns are useful triggers along with some indicators like RSI and stochastic. Step 4. Define your exit trigger. In Forex, it's very important to know how to exit when things go wrong. The market can go against you and can cause traumatic losses. This is why it is critical to always have some kind of stop loss on your trades. You also need to know when to take your profits, so stay cautious. My saying is, if it's blue, don't overdo. The market be acting funny, so stop playing and take your money. Okay, you guys, I lied. I just made that up, but it's still valid. Step 5. Write down your trading rules. Having a written confirmation checklist is a great method to help you stay disciplined and consistent. Having a record of your trading strategy could also be useful later down the line when trying to refine it. Step 6. Backtest your strategy. See how price reacted with your indicators in the past. Do you feel that the indicators you chose are an accurate representation of what the market was doing during that time? If so, take your strategy to demo and practice. Now, this is probably one of the most important steps you should take before trading with your real money. After 30 days of consistent results with your strategy, feel free to fund up your real account and get to the bag. Finally, we have step 7. Adjust your strategy as needed. Your first trading strategy may not be your most profitable strategy, and that's okay. Just keep tweaking it until you find your rhythm within the market. Do your best not to make any drastic changes to your trading strategy. Just small adjustments where needed. And give yourself time to really practice a strategy before you declare it unusable. My recommendation would be to practice the efficacy of your trading strategy for at least 30 days straight, depending on market conditions. Lastly, I want to remind you that you will not win every trade, and that's okay, as long as your wins outweigh your losses. So be patient, calculative, and don't force trades that aren't there. Now, let's apply these 7 easy steps to come up with a basic trading strategy. All right, you guys, so we are here on the daily time frame for EUR AUD, and we're going to be going over the 7 easy steps that it takes in order to create your own trading strategy. So step 1 is going to be to know your time frame. So typically what I like to do, you guys, is start on the higher time frames, the daily, the 4-hour, just to get an idea of what the overall trend of the market is, you know, what the big move of the market is going to be. And then I usually like to scale down to a smaller time frame like the hourly or the 30-minute in order to find my entries. So right off bat, the time frames that we're going to be working on is, I'm just going to honestly put top-down analysis. Top-down analysis with a focus on the 1 hour for entries. Okay. Now, number 2, choose your trend indicator. So for this strategy, you guys, what I'm going to personally want to use are the moving averages, which those can be used as trend indicators alone. We're also going to use the MACD, which kind of doubles as a trend indicator and a momentum indicator. And then we're also going to add on there the DMI, just as an extra confirmation of when there is momentum in the market. So let me just hover over here to indicators. I'm going to type in moving average. Here's the option for moving average. I'm just going to tap that twice. 1, 2. Now you guys will see we have 2 moving averages on our screen. Next, let's go ahead and type in the MACD, the moving average convergence divergence. I'm just going to tap that once. And last but not least, we're going to go ahead and add our DMI, the Directional Movement Index. So I'm just going to tap that one time as well. And now you can see we have 2 moving averages, a MACD, and a DMI on our screen. So let me exit out of this, and let's just go in and adjust the inputs for these indicators. So for the first moving average, we're going to come in and change our length to 4. We're also going to change the color of this to yellow, just so we can see it as it cuts through the candles. I'm going to thicken the line just 1. I'm going to thicken the line just a little bit. And then let's go on to our next moving average. We are going to adjust the inputs for this, the length to 10. And for the style, we're going to change the color to white. And we're also going to thicken this line. I'm going to press OK. And then as for our MACD, I'm just going to make the signal line and the MACD line the same color as our moving averages at the top. So our MACD line, we're going to change that to the color yellow and thicken the line. And then for our signal line, we're going to change that to the color white and also thicken the line. Going to go ahead and press OK. And then last but not least, for our DMI, we are going to change our ADX to the color white. And our ADX is just going to represent how much momentum is in the market. Then we're going to change our DI plus to green because this is going to represent buyers in the market, and our DI minus to red because it's going to represent sellers in the market. I'm also going to thicken these lines as well, just so we can see them a lot better. And then as for our inputs, I'm going to change the ADX smoothing to 1 and the DI length to 5. Okay, and now we have our strategy. So when it comes to our trend indicator, we're going to have the moving averages as our trend indicators, as well as the MACD, and that's going to act as our trend and momentum indicator. And then we also have our DMI, which is also going to act as a trend / momentum indicator. All right, boom. So this is what we have going on so far. We have already identified our time frame. We're going to be doing top-down analysis to look for the overall trend from the daily down to the 4-hour down to the 1 hour, where we will actually look for our entries. Then when it comes to our trend indicators, we have 3. We have the moving averages, the MACD, and the DMI. The MACD and DMI will also provide us with more information regarding the momentum in the market, along with our Heikin-Ashi candles, of course. Next, we want to define our entry triggers. All right, so There's going to be a different entry trigger for every single one of these indicators. They all pretty much act the same, but you want to wait for them all to align before you enter into a trade. So let's start up here with the top portion of the screen. If we're just talking about our moving averages, our entry signal for our moving averages will be when they cross. Okay, so let me go ahead and type this out. When the yellow MA is below the white MA, you want to look for sells. When the yellow MA is above the white MA, you want to look for buys. Pretty simple, you guys, okay? So we have our yellow moving average. It crossed below our white moving average. And when it crossed below, this market continued to sink, right? And vice versa, when we had our yellow moving average cross above our white moving average, the market was starting to push up, right? So when the yellow is above the white, you want to look for buys. And when the yellow is below the white, you want to look for sells. So if I was looking for a sell based off of these two indicators, what I would want to see is the yellow cross below the white. And then once the yellow crosses below the white, I would want to see a flat top bearish candle moving in the downward direction. Once we can get our flat top bearish candle to close, then we would enter the trade and continue this move down. And vice versa, if I was looking for a buy, then I would wait for my yellow line to cross above my white line. And then I would want to wait for a green flat bottom candle, right? A bullish flat bottom candle. Once I can get that flat bottom candle to close, that would be an entry signal for me to get into this trade for a buy. So now that we understand our entry signal for our two moving averages, let's take a look at our MACD. What do we want to see here on our MACD? So it's honestly going to be the same exact thing for our MACD. So when the yellow line is below the white line, again, you're going to be looking for sells. And when the yellow line is above the white line, you are going to be looking for buys. It's just that simple. So if we were looking for a sell opportunity on the moving average, we would have wanted to see our yellow line crossing below our white line. Now, extra confirmation that this market was going to move down was if you saw our signal line and our MACD line cross below the baseline of our MACD, and also if you saw an increase of volume on the histogram. That is also another confirmation that we have more momentum entering the market in the downward direction. Again, vice versa, if you were looking for a buy, you would want to see the yellow cross above the white. Another confirmation would be if you could get the MACD and the signal line, the white and the yellow line, to cross back above the baseline of the MACD. And the third confirmation would be if you could see an increase in volume on the histogram bars as well. Last but not least, let's take a look at the entry parameters for our DMI. So for the DMI, what you want to see for a buy is the green above the red. That's going to be a signal for a buy. And if you see the red above the green, that is going to be a signal for a sell. When it comes to the white line or the ADX, it needs to be 25 or above for the trade to be valid, okay? If the ADX is not at 25 or above, that means that there is literally no momentum in the market at this time. You're going to enter a trade and you're barely going to see any movement or profits. So if I was looking for a sell, I would want to see my red line above my green line, like so. But then I would want to have my ADX, this white line, to be above 25. So the 25 point here on this ADX would have been all the way down here, you guys. Okay, so as you guys can see, this one move surpassed the ADX by far. Okay, it went all the way up to our 98 range. So this move had a lot of volatility within the market, and this would have been a great trade setup to get into just based off of how the indicator is looking. Now for a buy, you would want to see the opposite. You would want to see the green over the red. And again, we would want our ADX to be above 25, which as we can see at this time, it was up at 76. So these were both high volatility opportunities within the market. So when it comes to defining our entry trigger, we want to see the MAs cross. You want to see the MACD and signal line cross with high momentum histogram, right? And then for our DMI, we want to see the DI plus and the DI minus cross with ADX at 25 or above. Boom. So we now have our time frame, right? We know that we're going to be doing top-down analysis, but looking for our entries on the hourly. When it comes to our trend indicator, we have chosen our moving average, our MACD, and our DMI. When it comes to defining our entry triggers, we know that we are looking for the MAs to cross. We are looking for the MACD and signal lines to cross with high momentum on the histogram. And when it comes to defining our entry triggers, we are looking for our MAs to cross. We are looking for our MACD and signal line to cross with high momentum on the histogram. And lastly, we are looking for our DI plus and DI minus to cross on our DMI, along with the ADX to be above 25. Let's also not forget to add in there, right? Let's not forget up here with our MA crosses, we also want to see a flat top or bottom candle. All right, we cannot forget about our flat top and flat bottom candles, you guys. Those also represent momentum within the market. So what's next on the list? Next is define an exit trigger. So if I'm being quite honest, you guys, I personally would not use any of these indicators as an exit trigger. So what I would personally do with a strategy like this is create my own exit trigger, which means give myself a take profit. I would go back and back test even the smallest moves in the market, right? And see what is the max amount, even on the smallest move, how many pips can I catch? So if I'm being quite honest, you guys, a good exit trigger for the hourly time frame is about 30 pips. You can definitely expect to see 30 pips on the hourly time frame, even if the move goes your way just for a little bit and then turns around the other way. 30 pips is a pretty safe bet for an exit trigger. So we will do a 30 pip take profit for our exit trigger. Okay. So now we're just going to pinpoint this sell within the market, and I'm going to show you guys how you would have used this trading strategy to make money, okay? So let's just go ahead and define this area with some vertical lines. So it crossed here, and then it crossed here on our daily time frame. Now, We said we will come to our daily time frame, right, and our 4-hour time frame in order to get a gist of what the overall movement of the market is. At this time, it would have been obvious that the market was selling, right? We had our yellow line below our white line. We had multiple flat top candles, right? We had our yellow line crossing below our white line here on the MACD as well. We had volume increasing on our histogram bars, and we had our red over our green with the ADX all the way above 30 at the time. So we had a lot of great confirmations here on the daily time frame that we should be looking for sales. So next I would have gone down to the 4-hour. So now we are on the 4-hour, and if we take a look in between these two pink lines that we did specify on the daily, what is the market doing? It is literally doing the same thing that we saw on the daily time frame, you guys. We have our yellow below our white for our MAs and our MACD, and then we also had our DMI lining up for us when it came to this big sell. So we have the daily letting us know that the market is tanking. We have the 4-hour agreeing with the daily. So now all I will want to do is scale down to my hourly time frame and wait for everything to add up here on my hourly time frame before getting in for my 30 pips. So let's see. So here we are on the hourly time frame, and the original cross for this move on the daily happened back here, right? Now, when the cross down happened on the daily, we can see that it was actually in a cross up on the hourly. Now, since we know that the daily and the 4-hour were both selling at the time, it would have made no sense for us to get in on this buy. We would have waited for the next cross down, waited for all of our indicators to line up, and then we would have gotten in for this move down. So let's see. Up here for our moving averages, we did get a cross down, right? Our yellow is below our white. Down here on the MACD, we have the same thing. The yellow is below our white. Then down here on the DMI, we have our red above our green, letting us know that sellers are in control. And our ADX at this time, let's see, where's our first flat top candle? Our first flat top candle was this one. So the ADX at that time was actually at 47, you guys. So we had more than enough confirmation letting us know that this was a great high volatility move within the market. So let's say I waited for this candle to close, right? This first flat top candle after the cross. If I would have waited for this to close and then gotten in for my 30 pip take profit, my 30 pips would have been hit. Let's see. In about 2 hours, you guys. I would have been in this trade for about 2 hours, and my trade would have hit take profit. I would have made money. Let's see. We got another cross up. Then we got another cross down. Let's see what happened on this next cross down. On our second candle, we got another flat top candle after the yellow cross below the white. The MACD, we also have our yellow below the white. We have increasing volume on our histogram. On our DMI, we have our red above our green, letting us know that sellers are in control. And on this exact candle, our ADX was all the way up at 63. So this was yet another high volatility opportunity for us to enter this trade for another 30 pips. So let's say we got in when this candle closed with this flat top, right? We always want to wait for the candle to close to make sure that it's actually a flat top, right? So once we got this candle to close at the top of the next hour, we would have entered and then set our take profit for 30 pips. And we would have gotten our 30 pip take profit within the next 2 hours yet again, you guys. So it is really just that simple and just that easy. So what I'm doing now, you guys, is actually back testing. I'm going back and I'm finding previous examples in the market of when everything would have lined up and then determining if my parameters would have been hit. Would my 30 pip take profit have been hit in this instance? Yes. Would I have made my 30 pip take profit on this move as well? Yes. So you simply want to go back once you create your strategy. You want to go back in history and test it out. See, hey, I had everything lining up here, 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 and here. Would I have made my take profit? Yes. Okay, great. And keep going back to back test. And the more you can see instances in the market where everything just kind of played out perfectly, that is just going to be even more confirmation that the strategy that you have created is just that valid. So really quick, let's just run through the steps to developing our own trading strategy again, right? And how we were actually able to apply that to the charts today. So number one, know your time frame. As you can see, we started on the daily time frame. We then scaled down to the 4-hour time frame because we were looking to determine the overall trend of the market. Once we determined that the overall trend was a sell, we then scaled down to our 1-hour time frame, and we then waited for our indicators to align for our entry signals. First, we have our moving averages as our regular trend indicators. Then we have our MACD as our trend and momentum indicator. And then we have a DMI, which also acts as a trend and momentum indicator. When it comes to our entry triggers, we are looking for our yellow moving average to either cross above or below our white moving average to signal a buy or a sell. We are then looking for a flat top or flat bottom candle as confirmation. For the MACD, we are also looking for the yellow line to cross below or above the white line to signal a buy or a sell for us. And then we're also taking a look at the volume bars on the histogram in order to determine when momentum is entering the market. Last but not least, we have our DMI, where we are looking for our red lines and green lines to cross in order to let us know whether buyers or sellers are in control. And we are also taking a look at our white line, which is our ADX, to also inform us of when there is volatility entering the market. Now, when it comes to defining our exit trigger, we have already come to the conclusion that a 30 pip take profit on the hourly time frame is an amazing first step when it comes to our exit trigger. So rule number 5 is to write down your rules. We have our rules written down here on the screen. Rule number 6 is to back test your strategy. I just showed you guys how to back test. You go back in history and you take a look. Hey, when all my parameters lined up, did my take profit get hit? Yes or no? Just that simple. And last but not least, step 7 is to adjust your strategy as needed. So if after you go back and back test, you realize, you know what, actually, this indicator didn't really work too well with the other indicators in this instance. And I've seen it happen this way a few other times in the past now after back testing. I think I want to go ahead and either remove or replace this indicator, right? That is what I mean by adjust your strategy as needed. Take a look at how all your indicators work together. Study them together in the past and present in order to determine if you believe that they will continue to work together well in the future. And when it comes to developing your own trading strategy, there's not really much else I can tell you. I do hope that this training was very helpful for you. If you have any questions, you know exactly where to reach me. But until then, I'll see you guys in the next class. If you have any questions or remarks, please join my discussion board and make them known. Feel free to follow me on social media and leave this emoji under a recent post for a follow back. Thanks again for tuning in to Money with Mari, and I'll see you on the next episode of Forex 101.